Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back to our regular community. My goal is to share my decades of trading experience to assist you to be more of a financial blessing to yourself and those you love, and also gain real wealth in the process. Let's run the numbers. Bitcoin currently trading at 46,447, down 11.82%. Ethereum 3446, down 12.03%. I've hidden knowledge gems throughout this video. Unless you watch to the end, you'll miss them. See how many you can find. Rule 174, T-Cube, trend timing and trigger. We're going to look at trend using the KS process. We start with KS wealth analysis. The crypto space requires a lot of strength and a lot of courage to maintain your position. When we talk about KS real wealth analysis, what we're saying is that there are far more valuable things than just money. Money is critically important, but there also are a lot of attributes to develop alongside your wealth. Helen Keller said it really well. Optimism is the faith that leads to achievement. Nothing can be done without hope and confidence. On a day like today, where we've seen such a significant sell-off in the crypto space, having optimism is really important. Having hope is really important, and confidence also. But that hope and confidence and faith cannot be blind. We're really about knowing what the probabilities are, where we are in the cycle, and then making informed decisions from that basis of statistical and probabilistic knowledge. Real wealth requires optimism. It's hard to have a positive life with a negative attitude, and it's not just about positive thinking as well. Positive thinking will only take you so far. However, it's really important to have a degree of optimism in the crypto space. Crypto is so incredibly volatile. Lucille Ball said it really well. Making optimism a way of life can restore your faith in yourself. Real wealth is an internal journey. It's not for anybody else outside of yourself. It's all about you. It's about having meaning and fulfillment, inner and outer peace. Those kind of things really make life far more enjoyable. I'd like to thank the very generous and kind people, members of our community, who have bought me a coffee on buymeacoffee.com/cryptotradingks. Thank you so much, everyone. And I just wanted to share a little story from Rasa from Colorado. Basically, Rasa beat stage 4 cancer 8 years ago. What an incredible person. I just want to send out my love to Rasa, and I know there are so many people inside our community that have had very challenging health situations and other situations in their life. We as a community are really, really supportive. You can reach out to anyone here. We're very, very close-knit community in so many ways. Our community is also really special. It's literally a group of friends who have never met. Hopefully we'll all actually meet together one day. That would be just so beautiful. I love it how different members of the community interact with each other through the comments. It's really beautiful. Everybody is there to support each other and help each other. Thank you, everyone. I do pay a lot of attention to all the comments across YouTube, Facebook, and all the other particular channels. I will definitely get around to answering your queries, even if it requires a special video. Thank you again, everyone. Let's have a look at investment substitutability. S&P 500 proxy for stocks is up 35% over the past year. Gold is down 8%. And Bitcoin is still up quite substantially, up 357% for this past 12 months. It's really important when you look at these percentages, you see very high numbers. 2 years up 351 for Bitcoin. 2 years, 3 years, up 653%, 4 years, up 987%. What this basically means, investors see the returns on Bitcoin and they far exceed gold, which is not doing too well, and far exceed the S&P 500 or stocks. They're not doing too well compared to Bitcoin. Of course, they don't understand the volatility that is inherent in Bitcoin. It's an incredibly volatile asset class. Let's have a look now at the Bitcoin trend. I was saying before that it's very volatile comparative to stocks. We see declines in the Bitcoin market of 10%, which is any typical day of the week, and 20%, which is every other week. What we just went through is just a normal part of crypto's price action. It's very unpleasant when you experience it, but it's really important to understand that this can happen and does happen all the time in crypto. It's not like the stock market. The stock market, wait for it, is far more certain. Now, what does that mean? When things are much, much more certain, what happens is the returns go towards zero. That's why we always look at this. Investment substitutability. The reason that we've got such high percentages in Bitcoin is because it's a very uncertain asset class. However, a few things are not uncertain. Basically, we're looking at Bitcoin, which is the foundation of the Internet of Value. It's just not simply a crypto. It's like buying Amazon and Facebook and Google and PayPal when they were first literally created. You're owning a piece of the next internet, and that internet will supersede the growth rate of the old internet and upgrade it. Fidelity Investments is predicting $1 million per Bitcoin in 2026, and by 2030, $10 million per Bitcoin. It's really important to put these price fluctuations into context. Prices go up and down dramatically in the crypto market. It's because it's a very uncertain asset, but that is what drives the returns. You cannot have one without the other. To have more certainty, that exists in the stock market, of course, but the returns are just a fraction. All of this is summarized in Rule 114. Markets penalize certainty. Now, what does this really mean? It means when things are pretty much certain, that means that the markets will penalize. We know that the stock market has a reasonably certain trajectory. It goes up by certain amounts. Bitcoin is an uncertain and exponential asset class. It goes up exponentially, but it also comes down exponentially, and that's just part of its realistic price movement. It's always moving in a wave. It's very important to understand Rule 114. As soon as things seem really, really certain in crypto, in all probability the rug is about to be pulled. It's just the nature of the market. It's often important to zoom out and see what's happening in terms of a long-term view. When we look at the KS model, which is a crypto technical trading model based on institutional price psychology, we're currently in the bull market psychology of the particular segment of the market. We have a bull market psychology, a bear market psychology, and a consolidation psychology between halvings. We're in that process right now of the bull market psychology. The expectation is for higher prices. It's also really important to understand that people from traditional markets have a lot of trouble with the volatility of Bitcoin and cryptos. For example, we see here that bear markets are often triggered by a 20% decline. We just had one of those. It's every other week in crypto. It's nothing abnormal, but if it happens in the stock market, it is significant. In crypto, it's irrelevant. Let's just zoom into the current price action. What I did previously is I realigned some potential projections based on the on-chain metrics. I've just changed the color to blue so that you can see it more clearly. The last episode we were up the top here of this particular candle. What happened? Bitcoin crashed literally through the floor, found the averages and pushed back up. I believe that there are very logical reasons behind this, and I'll explain them a little bit later on. What we're seeing here is that we had a bar that went down there anyway. We have a bar here. It's all part of natural price action. Crypto moves around in a crazy manner. It's really important to understand how volatile crypto is. If we have a look at the Bitcoin long view model, we can see we're in phase one of the bull market cycle, the psychological sunshine. This is the largest phase going back many years. We're just getting started. It's also really important to understand that Bitcoin and cryptos are far more than just price action. They actually represent something. This particular analysis here, technological adoption curve for the internet and crypto users. The internet here in white, showing growth of internet users from 1992 to 2006, and the corresponding growth in crypto users from 2016 to 2030. We can see that the crypto users are growing far more quickly than the internet users ever did. I was actually running an internet service provider down in 1993. I saw incredible volatility and so many laws trying to be passed to curtail and stop and derail the internet. It didn't work. Why is that? Because innovations always obey certain specific rules. If it can be done more quickly, it will succeed. If it can be done more cost effectively, it will succeed. The internet does that. That's why we don't see horses and buggies around as the major mode of transportation. We have cars and motorcycles because it's a speed-based economy that we live in. The internet of value, the money internet, is the next evolution. It promises to transfer trillions of dollars at the speed of light. Everything is different now. We're also potentially leaving the Earth's surface to explore other planets. When we get to other planets, we're not going to pull a paper note out of our pocket. It must be digital. It's essential to space colonization, which is absolutely the next era in human advancement. And we can see a lot of things hitting the market in terms of robotics, artificial intelligence. There are a lot of things that will derail the old financial system that needs to be upgraded. And of course, the financial system doesn't like that. Unfortunately, there's very little it can do about it. It's in the same position as the horse and buggy manufacturers before cars took over. Fidelity Investments also did some analysis. Less than 1% of the population has an active Bitcoin address. Less than 3% actually hold Bitcoin. We are so early. That means it's very uncertain, and you know what uncertainty means. Fantastic returns and fantastic volatility as well. One major contribution of the KS model into the crypto space was dividing the market segments up into a bull market psychology, a bear market psychology or nighttime, and a consolidation psychology, which is dawn. When we compare different phases of the market, we must always compare light to light. For example, the bull market psychology of the current segment to the bull market psychology of past segments. This is really important to do. When we're in the bull market sunshine, we don't want to compare sunshine to darkness or sunshine to dawn. They're completely different things, especially sunshine to darkness. We must always compare apples to apples. The law of mathematical consistency. Make sure that things are comparable from a psychological state. Rasa asked, what kind of volatility would we expect going into the peak? We can expect big drawdowns, for example 20% on average going through, 20% up to 40%, 30%. We could even get 50% drawdowns. It's more than possible. But the other side of the exponential equation is exponential increases. For example, like 90%, 40%, 40%, 70%, 20%, 50%, and then over several 100%. Those several 100% will start to hammer in either the top or the intermediate top. We need to keep our eye on things. A lot of people put a great degree of stock in the number of addresses. What we can see here from a statistical perspective is that there is some association with the number of addresses leading up to a peak. It tends to increase, but then it can lose a degree of correlation as it goes forward in time. We have to treat various statistics very, very carefully. You can see this is an analysis of Bitcoin number of addresses with a balance equal to or greater than 10 Bitcoin. You can also see the number of addresses with balances equal to or greater than 100 Bitcoin. What do we see here? Kind of different behavior. It's very important to understand how to look at data from a statistical and probabilistic perspective. I always look as a trader. I'm interested in anything that gives me a real association. What is this telling me? When I look at this graph, as a statistician, I look at it, the number of addresses with a balance greater or equal to 100. Look at the number. They're coming down and down and down. Price is going up. This is almost an inverse relationship in one sense, but that is the bear market segment. But it happened way back here in the bull market segment. Remember, we're always seeking to find the comparable psychologies. There's not much of an association in this particular data set. For many years, I lectured first and second year statistics, and one of the things was that I saw an enormous amount of misrepresentation in the media over certain things. People just literally fitting the data to suit a particular narrative. This is spent volume age bands, SVAB, 7-day moving average. One of the important things to note is that people can say a lot of different things and draw a conclusion that is maybe erroneous or certainly statistically erroneous. When we look at coins that are held from 7 to 10 years, it's important to realize that Bitcoin hasn't been around that long. When certain things are being pushed into the market, depending on their basic annual holding period, it can give you a quite erroneous understanding of what's happening. You can see so many things playing out here. It's important to be consistent. Some on-chain data is really, really efficient and effective to analyze from a causality perspective. Indeed, a very substantial correlation between price and the particular piece of on-chain data. Some not so much. It's really important to think about things like this. If, for example, Bitcoin was introduced in 2010 and you're looking to compare, for example, Bitcoin held for more than 10 years. So let's just do that. I want to show you how erroneous, conceptually erroneous certain things can be. If you're at 2010 and you're saying, okay, I want to see anything held for more than 10 years. Bitcoin just started. Nothing can be held for 10 years. So we look at this, oh, it's all up here. Why? Because it's over 10 years old. Doesn't it make sense? Isn't that interesting? Oh, what about 7 to 10 years? Oh, how did 7 to 10 years play into this cycle or this cycle? You can see you've got to treat some data with suspicion because it's not that meaningful. Some data can be more meaningful, but it's really important to question and to say, hang on, is this really as significant as people make it out to be? I can tell you there are commentators out there that talk about the holding in excess of 10 years being something significant. It's really not. If you see this actual percentage, this is 0%. Here, it doesn't even register 1%. It's tiny. These are the things that non-statisticians don't look at. And coming from a background in statistics and actuarial science is just mathematics on steroids, basically. We can see that there are some associations that could never become comparable to others. I just raise this because people are selling subscriptions on the basis of this data. And I'm not talking about Glassnode. Glassnode is a fantastic site. What I'm talking about is people saying things like, join my service because I'll give you an insight into the market no one else has. And I look at it and say, no one else has it because it doesn't make any sense. I just like to point these things out to our community. I think that's the kind of asset test I bring into the market. Let's have a look at crypto stocks. Looking at Bitcoin compared to public companies with Bitcoin exposure, we can see Hut 8 out in front, followed by Galaxy Digital, ADE, SI, BTBT, HVBT, Bitfarms, Marathon Digital, Coinbase Global, Argo Blockchain, VYGVF, Voyager Digital, and then Bitcoin. Underneath Bitcoin is MicroStrategy and Riot Bitcoin. This is over the past 14 days. Let's have a look at Bitcoin compared to the public companies with Bitcoin exposure over the past 12 months. We can see Argo Blockchain, ARB, is out in front, followed by Voyager Digital, then Marathon Digital, Bitfarms, BitF, Hut 8 Mining, Riot Blockchain, HVBT Hive Blockchain, Silvergate Capital Corporation, Galaxy Digital, MicroStrategy, and then Bitcoin. Then underneath Bitcoin, BTBT, BitDigital, ADE, the Bitcoin Group SE, and Coinbase Global. Let's compare Bitcoin to Bitcoin ETFs over the past 30 days. One thing that actually really sticks out to me is Grayscale Digital Large Cap Fund, GDLC. Look at this behavior just before the sell-off. We were looking at this and we looked into the components yesterday. We couldn't find any associative sell-off. It was almost as if GDLC was foretelling what would happen to the crypto market. And that is quite simply crazy. I'll show you why. Grayscale has two major products. GDLC is this one, holding 7,346 Bitcoin, around $350 million worth. Grayscale Bitcoin Trust holds 654,600. It's about $31 billion worth. To say that this fund could foretell, GDLC could foretell the crypto sell-off would be pretty much crazy. But there was something there, wasn't there? It was really fascinating to see. But the question is, why didn't all the other funds have similar behaviors? It was like literally GDLC was stepping out and showing itself up. But of course, what does it mean? Just think about this. If you got $30 billion, $31 billion in Grayscale Bitcoin Trust, and the price of Bitcoin comes down by 10%, you just lost over $3 billion. Why wouldn't you sell heavily out of there? Selling out of a minor fund instead of selling out of a major fund makes absolutely no sense financially. So let's check what happened to Grayscale. Grayscale holdings are indeed coming down, but they're certainly not reflecting any major sell-off. We can see Ethereum Grayscale holdings not showing any significant sell-off. If we look into the Bitcoin Grayscale flows, we can see net selling activity, not inflows, selling activity on Ethereum as well. If we look at the Grayscale premium, it's going down, as is the Ethereum one. We can see assets under management actually increasing. We see that too with the Ethereum Grayscale assets under management. We certainly don't see anything out of the ordinary. I look across this and about 50 other factors every day, and I seek to just bring you the absolute cutting edge. I didn't see anything that warranted this recent sell-off, but I have a feeling I know why it happened. I'll explain that a little bit later on. Okay, since we've done our due diligence on GDLC, we can see that there was no weird behavior under either Grayscale Bitcoin Trust or Grayscale Digital Large Cap Fund. There was nothing there to foretell anything in terms of a crypto-wide sell-off of any sort. We can see that in the past trading action, of course, as Bitcoin came down, pretty much everything followed it. This is just normal price reaction. These are Bitcoin ETFs. If Bitcoin goes up, you would expect the ETF to go up because it tracks Bitcoin. Let's compare Bitcoin to the Bitcoin ETFs over the past year. We can see that the only fund actually doing better is BitW, the Bitwise 10 crypto fund. If we look at Bitcoin, Bitcoin's performance is next, up 345.92%. We can see what follows: QBTC, the Bitcoin Fund Canada, 21XB, 21 shares Bitcoin ETP, the Grayscale Bitcoin Trust, GBTC. Then following that, we can see that huge sell-off in GDLC, the Grayscale Digital Large Cap Fund. We're going to keep our eye on this from now on. If we see any perturbed movements in GDLC, that will be an indication that we're going to pay more and more attention to the crypto market. It's done it once, by accident perhaps, but we'll look at it. BitC, the 9-point Bitcoin ETF. BitC, the CoinShares Physical Bitcoin. BTCC.B, the Purpose Bitcoin ETF. BTCX.B, CI Galaxy Bitcoin ETF. Then the 3IQ CoinShares Bitcoin ETF, the Bitcoin ETF, which is EBIT, and last place, OBTC, the Osprey Bitcoin Trust. A lot of community members hold a Bitcoin Cash, Chainlink, and Litecoin. So I just use this analysis of Grayscale Digital Large Cap Fund to actually share a little bit of technical analysis of those coins as well. Let's have a look at Bitcoin first. What I've done is to put the inverse of the VIX into Bitcoin. We can see fear in the market is increasing. However, we notice that Bitcoin's price sliced through that $50,000 mark. I believe there was an enormous amount of liquidations in the market overnight, around 3.22 billion in long positions. When people go long under derivatives, and I hope anybody going and using derivatives is a professional trader and investor, that just means that you're consistently profitable. Else you have the potential to wipe out your account. We certainly don't want that for you. When we look at this was an example of stop hunting in action. It happens from time to time, but I'm just surprised, as are a lot of other market commentators and analysts, at how severe this was. When we get into the timing side, I'll show you in much greater depth, but basically what happened, the price was pushed down. There was a lot of extreme greed in the market. The stable coins were the highest percentage losses for several periods straight, which always signifies a bit of a correction coming. Now, what we actually saw was the slicing through of the $50,000 support, which was a key psychological level. That would have activated a lot of stops for people going long in expectation of higher prices. When their stops get activated, they must sell. There were so many of them $3.22 billion worth of longs, that it actually pushed the price down because they were forced into a panic sale. That is actually what I believe caused this. Now, what could have driven that? Could have been the El Salvador IMF potential issue of saying, okay, well, if you're going to adopt a country-wide Bitcoin and you're going to abandon the dollar and we can't control you, we're going to show you what that could mean. And the El Salvadorian president just said, fantastic, I'm buying more, thank you very much. So he obviously didn't care too much about it. And that's a bit of a conspiracy theory, but who knows in this world? It's possible. But I think it was much more likely that this $50,000 retest was so severe that it just shook the market up and plunged it down. Now be aware, and I'm going to discuss this more in the timing episode, when you come to buying a dip, dips don't necessarily last just one day. When we look at Ethereum, we can see Ethereum wick down to this particular support line, Cardano, wick down to this support line, rejected strongly up. It appears to me that this is just panic selling by the longs. We have a look at Bitcoin Cash, same kind of behavior. We're over this trend line. We look at Litecoin, same kind of thing. This once resistance now support line held that price quite well. Chainlink, same concept, same ideology playing out. I always do an enormous amount of research before I even come close to making one of these videos. There literally are hours and hours and hours of preparation time for each episode that you watch. I just want to make sure you get the best quality information every day, 7 days a week. Let's quickly look into health impacts. That always comes up in the media, so I think we need to look at it, but it's important not to name it for some reason. If we look at the cases in the last 7 days, we can see a weekly case change of negative 10%. That's actually really good, but those cases are still way over the top in terms of millions and millions of people globally getting the problem. We can see that there are a number of negatives being registered and some double-digit negatives, which is really fantastic, especially Indonesia. Wow, go Indonesia. The important thing to realize here is what this could mean economically. From a policy stance, if this particular health problem is exacerbated, it's increasing, the probability of tapering becomes far less. The probability of tapering is actually far less already, just because of the catch-22 position that central government regulatory agencies have found themselves in with pouring so much stimulus into economies. The problem is that this may be foretelling a potential increasing of the probability of tapering, potentially. But if we look towards vaccinations, only 40.61% of the population globally is actually covered. Around the world, we have nearly 222 million cases. We can see the vaccine doses are increasing across the world. From a health perspective, I don't think that those improvements in numbers are any way significant to alter policy stances. So let's have a look at the market indexes and see if we can see any weaknesses anywhere. We can see around the world globally, there was a degree of red coming out here, down about 0.5% to 1% throughout Russia, 0.5% to 1% in Australia, not really that much. Now we can see that Brazil did really well, and also South Africa was green. A little bit in Finland, just very marginally. We can see a degree of red, but it's certainly not anything that we would say, oh well, the whole world has gone red. It's not like that at all. Let's have a look at Bitcoin compared with the major stock market indexes. We can see that the Nasdaq actually came up. It did really well. It's crossing over a level of resistance at the moment. There is definitely more fear inside the market, which tends to drive prices down. Fear is always a major component of any market. We can see Bitcoin's retracement here and a leveling off. The S&P 500 came down a little bit. The Russell 2000 also came down, and the Dow Jones also, but we're not seeing any major sell-offs, for example, like Bitcoin. And the Nasdaq is very much showing at its leadership in the US sector. Comparing Bitcoin to the US dollar currency index, the DXY, we can see that the DXY retraced. It improved in value, Bitcoin coming down. We also notice a fairly positive correlation between the two. We're not saying they move in opposite directions, but we do know something about the DXY and precious metals. There's a strong inverse correlation between the DXY and the metals. That's why precious metals, that's why I put the inverse DXY here for you to see in green. We can see gold came down, copper came down, silver came down, palladium and platinum. We've got a little bit of a bounce here at the present time, but that's absolutely to be expected. If we look at Bitcoin compared to bonds, what we see are all the bonds moving down. The 20-year TLT, the IEF, 7 to 10 year, the TLH, 10 to 20 year, the 3 to 7 years, the IEI, and the 1 to 3, the SHI. We can see all of those are moving down, and Bitcoin is moving down. It's really interesting. Generally, there's an inverse relationship. For example, Bitcoin moves up and the bonds move down. This is what I was saying in many previous sessions. It's all about synchronization. Things move in and out of phase. It's almost like the indicator concept. If you're turning at a traffic light, the car or bike in front of you has its indicator on, you have yours on, you're both going the same direction, of course. Your indicators will phase in and out of synchronicity. It's just like the financial markets. It's happening all the time. I've observed it over many decades. When we compare Bitcoin to bond yields, generally they move with a positive correlation. They tend to move in the same directional bias. We can see the TYX and the TNX, so the 30-year bond yield and the 10-year bond yield, both improved. Bitcoin's price went down. This is generally quite anomalous. When we compare Bitcoin to inflation expectations, we can see inflation expectations went up. There is typically a positive correlation between Bitcoin. They move in the same direction. Bitcoin and inflation rate. We can see here the inflation rate went up and Bitcoin went down. Very anomalous as well. Comparing Bitcoin to the airline and transportation indexes, we can see Bitcoin just recently moved down. The airlines moved up, probably because of those statistics that we were talking about previously. The transportation indexes moved down. Comparing Bitcoin and Brent oil and crude oil, we can see that Bitcoin came down quite heavily. Brent oil and crude oil came up. Generally, if there is a crash in the market, the oil will literally fall off a cliff. We're not seeing anything like that. That actually is really good. One particular question could be related to, is Shanghai's composite index just breaking down and being destroyed because of all the sanctions that China is putting on its own companies? We can see that's simply not the case. It's rallying. And if we look at China's Hang Seng index, it's actually come through that resistance level, come back and retested support and resumed up. Very normal price reaction and very positive for the Chinese market. I've also looked across all the other indexes. I can't see any problems there. This particular sell-off, I think, was manipulated in so many ways. I think the big institutions went hunting for stops and they found them, and so many people were long that they just got crushed. I think that that is the most reasonable explanation for what actually happened. For example, to bring $3.22 billion into the market to liquidate other trading positions is not an easy thing. Retail typically cannot do that. Also, retail would have literally no interest in doing that. Retail investment is typically in an upward direction, not a negative direction. Shorts are more for professionals, and they need to be, because shorting can lose the shirt off your back. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you to our moderators for keeping our community safe from scammers. Please say hi and let me know where you are viewing from, and if you have any questions. If you would like daily updates on price movements in the crypto market, please subscribe to YouTube, and don't forget to hit the bell notification icon as content comes out at various times throughout the day and night. Please remember, crypto is volatile. Please prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, take care, and see you next time. Bye for now.